You're going to learn enough to keep yourself out of trouble with your broker, which means that when your broker says, this is what I suggest you get, or buy, or sell, or whatever, you can actually ask them for a chart and look at the chart and say intelligently, do it or don't do it. Okay? So I'm going to cover, again, the correct perspective. Learning to trade. The trend is your friend. This is trend trading. Chart basics, some simple indicators. I'm going to get more into indicators in the next session. And just to remember, again, the trend is your friend. So the correct perspective. You have to remember that time plus the investment is profit. Okay, it's like if you're starting a business, what do? What you do is you put together a business plan. Let's say you're going to sell widgets. Check your competitors. You're going to map it out. You're going to buy inventory. You're going to do some marketing. You're going to do some ads and so forth and so on. This is very similar to that because you have to do some investigation. You have to put your business together, and then you have to buy and you have to sell. Or in some cases, you sell and then you buy. But we'll cover that in the next session. And you always have to remember that the trend is your friend. Trend trading is the best way to trade. You can do it with news, information, and technical, or either or, but you can't do just news. If you, for example, if you hear of a company, like what happened back in the 90s, the internet companies, and you bought, it took off, and if you didn't get out, you would have lost. And a lot of times you hear news, and it isn't good news, and you might buy, and then the company goes broke. Information, it's like somebody tells you, or you read about it in a newspaper. You get into an IPO, public offering, thank you. And you get in at $15. Well, the first thing it does is when the people that have gotten in, they sell, right? So the price goes from 15 to 7 almost immediately. So that doesn't work. Technical is using charts. And you can do technical all by itself, or you can do information technical, or you can do news technical. It works. But you need that technical side. And that's what I'm going to show you today. So you always do technical, and it's an either or. Either with information and news, or information or news. And you always want what the market wants. So what's a chart? A chart has a bunch of indicators. It's like driving your car. You're driving your car, it tells you how fast you're going, how much gas you have, and so forth and so on. A chart's going to tell you when to get in and when to get out. That's how you listen to the market. The ingredients of a chart are the bars and the indicators. And charts are like a map. It tells you where you're going to go. Okay, so when you're learning to trade, usually you get a broker and a broker tells you what to buy or sell. But you can do a much better job than your broker. Just remember that the trend is your friend. But it's like riding a bicycle. Don't think that I'm going to give you this information and you're going to immediately go out and make $1 million on the market. Because if you remember, when you learned to ride a bicycle, somebody held the seat or helped you balance. And pretty soon you can do it by yourself, and that's what you need. You need somebody to help you. If you don't, you're in for a surprise. But if you have somebody helping you and you follow the rules, you're going to find there ain't no mountain high enough. I have gotten into something, and next morning or the next week, just been amazed, $2,000. It's incredible. You know, just following the rules. one of the things you have to remember that lightning never strikes twice. You can look at a chart and say, well, it happened over here. It'll happen again. It doesn't work that way. That's why you need indicators as a point of reference. And brokers, they make you broker. They really don't know. They just sell you what they think. They're basing everything on information and news and nothing technical. I had a broker say, you need to get into this company. It was a gas company, and it was going down. And I had my indicators, and I told him, send me a chart. And I said, look at the chart. It's going to continue to go down. And he said, no, it's bottoming out. But that's gambling when you think it's bottoming out. Because there's no chart that will tell you what the top is or what the bottom is. It only tells you when it's changing. That's all. And then there's using tools. We're going to get into that more into the next session. Okay. Okay, chart basics. That's why I brought this thing here. There are two types of bars. There's a single bar like that, and there's something called the candlestick. These are the two main bars. There's a bunch of other types of bars. The candlestick is an open bar, and it shows it'll be like this, or it'll be like this. It fills the bar with a color. You can color your bars. What is a bar? A bar is the movement of price in a time period. So for example, this bar here could be a daily bar. And what that means that in this day, that's where it moved. The top moved here, and the bottom moved down to here. They usually have a little bar on the side. That's where it opened, that's where it closed. You got another bar here. That's where it opened, that's where it closed. You can take any time frame, like 60 minutes. This could be 60 minutes. This could be 30 minutes. This could be 5 minutes. It could be 120 minutes, which is 2 hours. You'll always have a bar. It'll always, this kind of bar, it'll show where it opened and where it closed. Now, the thing about bars is that if you divide it up into thirds, that if it opened on the top and closed on the bottom, most likely the next day it's going to continue to go down. That's the first indicator. If it opened anywhere and finished at the top, that means that the next day it's going to continue to go up. If it finished in the middle, most likely it's going to either go up or down, right? That's the first indicator. The second indicator here is if you have a bar that looks like this, that means the trend is up. If you have a bar that looks like this, the trend is down. You're trying to determine trend here. So a long time ago, when the markets were first set up, these guys were trying to figure out, is the market going up? Is the market going down? Some guy figured something out. And what he did was he took the average and he drew a line. So you get this line through here. The average is calculated by the price on the top and the price at the bottom, and then you do a division and you get you plot the dot and then you draw the line. I'm going to move on to the next slide here. So in order to determine where the trend is, you have to use some kind of point of reference. So what we call this is a balance line. If the price is over the balance line, the trend is up. You never short the market. If the price is below the line, the trend is down. When the price moves through that line, you sell. When the price moves up through the line, you buy. That's really simply put. There's a little more to it than that. Okay, that's what's called a simple moving average. Then there's another one called the moving average convergence divergence, MACD. Now all that is it talks about acceleration. how fast it's going. So you get at the very bottom of the chart, you're going to have bars that look like this. So when it's going like this, it's accelerating. When it starts going like this, it's decelerating. And I'll show you a chart, a sample in a little bit here. Those are two simple indicators that demonstrate trend. You sure I've already got 9 minutes?
Mm-hmm.
Okay, there's a chart. Let me go back. It's not happening.
Arrow key look better for you.
Thank you.
You're welcome.
Okay, this chart here shows three moving balance lines. This one is calculated by what happens every 18 days. This one's 9 days, this one's 4 days. And you notice that they were together here and they spread out and the price moved all the way up. When they crossed, it's up here, it's saying the price is going to change. Okay, so if you get a broker and he says, I want you to buy here, well, you missed this whole trade down here. It's best to wait to see what the market's going to do. If he's saying you need to buy here, you don't want to buy here, or down here you don't want to buy. He might say buy because that's not the bottom. It's not the bottom until the lines start crossing again. Go to the next. Okay, this is an oscillator that shows acceleration, and you can see here there's a lot of acceleration here, but as the price moved up, it started losing acceleration. So it's saying right there the price is going to change. And it gave one more burst, and then it turned around and went down. And there's some divergence in there. The divergence is that the bars here are higher, but the price is higher, and these bars are lower. So when you see that, you know there's going to be a price change really soon. This one shows both. It shows the moving average lines and the acceleration. And you can see it's a lot easier to see it together because you can see the acceleration, and then it slows down, and it speeds up again. This is a different chart for a different company. That's the way a lot of people have their charts set up. Okay, so there's some rules. If you look at any chart, you'll notice that the price moves up 7 days. On the 8th day, you can take any chart. It never moves more than 7 days. The 8th day, the price is going to move in the opposite direction. I was telling you that lightning never strikes twice. There are no patterns. You have to use indicators. You have to know when to get in, how long to stay in, and when to get out. And never let your expectations influence your choice. Because if you think, oh, this thing's going to go up here, don't. Because if you're not looking at the chart and it says to get out, you better get out. So when you're trading, just remember, the trend is your friend, and take what the market wants to give you. Next week, I'm going to cover trend trading in detail. So it's not next week. I think in 2 weeks, for my next session. So, do we have any questions?
Are you going to go into the candlestick more?
Yes.
Okay.
Anybody else?
One thing I find I'm curious about is don't follow your expectations, but when you're analyzing the charts, you develop an expectations based on your analysis of the charts. So I'm kind of confused when you say don't go by your expectations. I'm trying to get a little definition of what you mean by that. Just because when you say expectations, I'm assuming that expectations after you've analyzed the charts, and then you go by your expectations based on your analysis.
Exactly.
So I'm trying to understand when you say the expectations, I guess maybe follow initial instincts, look at the charts first before you develop any expectations. I guess is what you're trying to say, right?
Right. Exactly. So what Sam is trying to say is that the expectation you want to follow is the one you get from looking at the chart, listening to the market. What's the chart telling you? Any other questions?
One more question.
Go ahead.
Okay, what's this recent weekly deal with the stock markets, especially Dow Jones and stuff jumping, few leaps and bounds up and down. Do we have any charts as to what we expect, what maybe Dow Jones may do within the week or anything like that, or any information that might help you in that direction?
I am going to answer that question in my next session.
Okay.
Okay, I can take one more question. Okay, great. Well, thank you, Mr. Toastmaster.
Mario, as always, I enjoy your speech. Thank you so much. And I know this was your third speech, and it was a technical presentation relating to stocks, which we can never have enough knowledge of it. And it's a very difficult topic. So thank you for that, and thank you for using lots of visual aids, and he kept everybody interested, jumping from the PowerPoints and to the charts where he was drawing, the drawing board. And the other thing that he did was, he actually had a very good outline on the topics he was gonna use, bullet points, so that's really good. And that's how he started his speech. The only thing I think I would really like you to improve is kind of wrap up what you talked about in the last two presentations. Because when we come back to the meeting again, I kind of forget because I'm so busy with my work. I know it was the topic of stocks that you started with your first presentation. So if you kind of give like a 30-second spiel, what you covered in your first one and second one, and then just kind of bring that into the third one, that would help me. And I don't know how everybody else feels about that. And then I think he ended it well, but I was trying to, I was hoping he would kind of wrap up what he started, but maybe because, like I said, I'm not feeling well and I didn't hear how he kind of wrapped it up. Maybe I was too busy writing it. But other than that, thank you so much for this. I really enjoyed it.